1st of October 2023, and I'm making my weekly prediction for SPY. As usual, we'll be going with the monthly, weekly, and finally the daily charts, and then we'll switch over to the Excel sheet where we'll go over this week's prediction and last week's trade, if any was taken. So, before starting this video, it's important to make the disclaimer that all information is completely educational, and therefore it's important to conduct your own technical analysis or just a fundamental analysis before taking positions in the market, since they are subject to heavy risk, and if simply blindly going off of this video, it can result in losses, so it's advised to take your own information into consideration first. Now that we have the disclaimer out of the way, let's get into the video. So let's go over the monthly charts first. We can see we had this extremely long upwards trend line where we had the month of August stopping the upward movement with a spinning top kind of candle. Then this month, the month of September that just ended, we had an extremely large red candle that broke the trend line downwards. This is in itself a very bearish signal since we have a downward break of the trend line. However, this can't be the only requirement for a trade, since we see that it also did break another support at 432.84, which gives us two bearish signals from technical analysis. However, since trendline breaks are prone to whipsaws, we will look at weekly and daily price action to determine whether this is the right trade so far. If we look at the RSI here, we can see that the RSI average is sloping downwards but has started to tilt up, but then the RSI itself has just crashed downwards for the last few months. So let's move over to the weekly charts where we can see some of this price action in a bit more detail. We saw that last week we had an extremely large red candle which gave us a strong bearish signal. We see that the average RSI is starting to slope downwards and the RSI is consistently going downwards as well. This week we had a very volatile week with quite a high volume. We can see that the volume for SPY this week was 479 million. Which is very, very high. However, it is a spinning top candle, which shows market indecision. In combination with this high volume, we can assume that there's going to be a high volatility price action this week, which is the case, and it will be more apparent when we switch over to the daily charts. However, as from the weekly charts, we can clearly see that the market is a bit indecisive right now, so we have to be safe. So immediately, the condition right now is to wait for the break of the high or low of the spinning top candle, and whichever side it goes towards is the position we take. So if it breaks downwards, then we have a sell, and if it goes upwards, then we have a buy condition trigger. So let's go to the daily charts where we can review this prediction so far in a little bit more detail. We see that on the 25th we had a green candle. Then we had two consecutive red candles, but this one here is a very large-tailed candle, which showing that the market went super far down and then got pushed back up by bulls. So from here we had another green candle, but then we had a very high gap up, and the gap was filled during the day. So the week was extremely erratic, and there wasn't really any direction. We can see that the average RSI is consistently going downwards, and so is the RSI. However, it is notable that the RSI did have a little bit of a zigzag pattern this week, showing like the non-directional tendency of the market so far. But what do we gain from this technical analysis? Well, we just get a confirmation that it's important to wait for the break of the high or low of the spinning top candle before taking a position, in order to avoid unnecessary losses and have a more guaranteed chance of making a profit when a trade is entered. So now that we've covered this, let's head over to the Excel sheet where we can review this week's prediction and last week's in a little bit more detail. So last week we entered at a 429.17 as the entry price, and we took 246 shares of SPY, giving us a total market exposure of 105,575.82 US dollars. The exit price was 424.87, which gave us exactly 1% return, giving us a profit of 1,056.98 US dollars, and our weekly closing balance is 106,774.01. However, this week the requirements are a little bit different. So we have a no trade yet again. We wait for the spinning top candles breakout. We buy when it crosses the high at 432.27 and sell when it falls below the low at 422.29 with a target of 1%. with the trailing stop loss. If the target or stop loss is not hit, then we take the close of the closing price on Friday. The max open interest for the monthly expiry is 454 CE, which is the same as last week and last month, at 66,220, and 420 for PE at 166,006. The monthly PCR is 2.45, and the max OI for the weekly expiry is 436 for CE at 17,849, and 420 for PE at 44,929. And the weekly PCR is 2.29. The weekly trend currently is down. The monthly trend is currently up. However, this trend line has been broken, and a few more candles will determine whether the trend has actually been changed or this is just a minor correction. So this concludes the SPY prediction for this week. And naturally, if there are any relevant changes to the market, they will be covered on this channel. But this is my prediction. And we did cover the technical analysis, go over last week's prediction, and give this week's prediction. So on this note, I'd like to conclude the video, and I'll see you next week where I'll make my new prediction for SPY and cover any trade that is taken for this week. So see you then. Thank you for watching and enjoy.